Grid trading is a systematic and mechanical trading strategy that's been used by traders to capitalize on market volatility. It's almost like having your very own cash machine, and in this video, we'll explore how it works and how you can implement it in your own trading strategy and achieve real and true longevity. At Blackwave Pacific, we began friendless in 2015, slowly growing at 5% per month. However, fast forward to 2020, our swing trading approach to grid was beginning to compound exponentially. It really was beginning to feel like a cash machine. When we were right, we opened a position and the market went straight to our target price. When we were wrong, which was at least 50% of the time, we opened a grid and got out of the trade at break even or a small profit. It was quite an incredible few years. The children's playground behind me cost €50,000 in 2022, and we added new regulation fire doors to replace some of the doors that were in place since the school was built in 1974. When we needed money, our grid system delivered. Heads, we won. Tails, it was break even. An incredible few years that all came to an end in a type of flash crash of the British pound against the Swiss franc during the ill-fated Liz Truss budget of September 2022. The Bank of England intervened to save the pensions of millions of UK citizens, because for some citizens their pensions were temporarily insolvent. As traders, we had to take the hit. Nobody was coming to save us. What happened to our cash machine? I can tell you what we did right to last 7 years in the first place, but the reason we failed in 2 words is this: no hedging.
Firstly, here is what we did correctly to last 7 years, and I am going to cut straight to it for you. 1. We operated on swing trading timeframes, so trades would last days or even weeks. This is unusual for grid trading, where most traders are working off the 1-hour graph. 2. Position size was roughly 0.01 lots per $1,700 of capital under management. Towards the end, between our IC Markets accounts and our FXCM account, we had more than $600,000 of our own skin in the game. Let me help you now. Here's an example of how to calculate the Blackwave Pacific position size. Take your balance. In this case, we are using $5,100 and divide it by 1,700. The answer is 3. Now divide 3 by 100 and you get 0.03. Your position size is 0.03 lots on a $5,100 account. I don't want you to despair at the small position size, because every position in the 10-position grid will be this sized, so cumulatively, it is potentially 10 times larger, and this is still a reasonable position size using leverage. In this case, 10 times 0.03 lots is obviously 0.3 lots, or 30,000, in a $5,100 account. Roughly, this is 6 times leverage, but think how wide our grid is on a swing trading time frame. It took 7 years for the market to beat it, by which time we were diversified into property and stocks too. So that is what we did right. Most times it never went to 10 positions, of course. Where a traditional trading strategy would shoot a bazooka-sized position at the graph with a tight stop-loss that got hit at least 50% of the time, we had 10 small bullets, 10 little positions to give us a nice swing trading average entry trading counter trend off technically overbought or oversold markets, and we got out at a profit where another trader took the loss because the position was so big it could not be let run past the stop loss. Now let's see what we did wrong.
We had clients tell us they couldn't believe how we could trade counter trend, and when all the experts confidently predicted how wrong we were, the trade would still somehow make money. Recall, this went on for 7 years. By the end, we thought we had seen it all, but we had another lesson to learn. As sterling franc began to move into oversold territory in September 2022, we began to open our grid. The UK had recently exited the European Union, and markets were looking on at the turmoil in UK politics. and the inflation that had been generated by the end of the pandemic with a degree of worry that was not understood by the Liz Truss government. The pound continued to decline, and we added to the grid, keeping our positions well spaced apart. Trading counter-trend, we had essentially traded in despair for many years. Pessimism was always followed by a bounce, markets oscillated, and on swing trading timeframes, we had always surfed the waves. That was why we called the company Blackwave after all. Then came the sudden crash after a weekend digesting the government's budget plans to raise spending and cut taxes at the same time, using extra borrowing to pay for it. The UK had run out of friends prepared to backstop a fiscal position such as this. On Sunday night around 11 p.m. UK time, sterling began to collapse. Within minutes, the 7-year run was over. The bounce that week was almost as sudden as the 900 pips decline. However, our equity position was wiped out. That was that, and what we did wrong was to exclude the possibility of hedging. We thought one. Our risk was already well controlled by our unique position size being 0.01 lots per $1,700 and 2. To hedge would simply delay getting out of our trade, but we underestimated how far and fast the market could go lower from an already very oversold position. This we have now corrected with Blackwave Pacific hedged. So here's what's new, and perhaps you can try this on the now obvious understanding that trading Forex is risky, and you should probably consult a financial advisor before doing so.
We could reduce the position size further, however. In our account Blackwave California, we had already done this. Blackwave California trades 0.01 lots per $3,000 and completely survived the sterling collapse, so that is one way to go and one way we have already gone. Blackwave California is 8 years old. However, in order to get our cash machine generating cash again, we need to trade the Blackwave Pacific strategy, but now with added hedging, which can only begin on position 5. Therefore, for the first 4 positions, the strategy remains the same, and in most scenarios, we won't get to position 5. However, on position 5 and again on position 7, we will add hedging. Then, if the position continues to deteriorate, we hedge the entire position on a 25% drawdown. Had we done this with sterling franc, we would have been fully hedged and protected as we watched the collapse, and then been able to close the hedge as the market approached the hedge from underneath. In this scenario, it is entirely possible that we might have made a profit on the trade that ended our 7-year cash machine.
Humbled, we have begun again. In late December 2023, we deposited 40,000 euros into our broker account and have now formally adopted the Blackwave Pacific hedge strategy. This is month 2 and year 1 of perhaps 10 years or more. We plan to get very popular again, but this is the ground floor. If you want to spy on our progress, the links to my FX book, which is an independent auditing website, are in the description of this video. Furthermore, we can manage your money to at MQL5 at Signal Start, or we can directly manage your money at our broker Blackwell Global based in the Bahamas. You too will have skin in the game and be on the ground floor of Blackwave Pacific 2.0, or as it's now called, Blackwave Pacific Hedged. All links in the description. Please give us a like to help us out on our renewed mission and our new cash machine. Thank you.